Hello guys, today's class is about bias and at last we see the bias entries. This is an important class, so be focused and note down what I say. Okay, let's start. For bias you have to know first thing that what is POI. Okay, I have a separate video, so if you want to learn deeply, see see the video. I'll quickly explain the POIs. First candle, second candle, and the third candle. The gaps between these two candles, let me mark a week also. Okay, the gap between the first candle and third candle is our FBG, and and the first candle is our order block. Oh, the order block. So then see, let's see. Let's pick this is the first candle, this is the third candle, and second candle, this is the third candle. Let me remove this one. So the first candle and the third candle gap is our FBG. Okay, see the first one, second one, third one. The gap between this first and third candle is our FBG. So what then? This is our order block. Okay, this is our order block. But we expect market will came and eventually move from there. But what happened? It broke this level. So when a order block is broken, it converts into a breaker block. Okay, so these three types of POI we use here today. So let's start. So first you have to know that market movement, how market moves. Market moves from POI to POI and POI to liquidity and liquidity to POI. Like example here, you see what I am saying. Suppose this is previous POI, market came and give from there and create a high and again some point from here an order block came or PY came and same move gave move from here also, and then what, when it was moving outside it was created a PY also here, and it came, tap and go, then see first thing PY to PY, second PY to PY, third PY to liquidity. Why we call liquidity this? Because swing high and swing low, where market where buyers and sellers are putting their stop loss. So this is, so these types of high and low is our liquidities. Okay, I will make another video about liquidity so you can learn what how many types of liquidities there. So then it took liquidity and what happened, and liquidity to PY. So market moves like this. Okay, let's see an example. Okay, first let's keep an example recent market. Okay, see, this is coming from previous PY. If you zoom there, you can see eventually, see, there is an order block. First candle, second candle, third candle. The gap between this candle is FBG, and this is our order block. So this whole thing is our PY. It is our PY, and again first candle, second candle, third candle. Again, this is our PY. Okay, so let's see. First one, tap and go. So from this PY to this PY. Okay, you can see the first candle, second candle, third candle. The gap is FBG, and the first candle is our order block. So then FBG to order block to again order block. Okay, this extra move is for this liquidity. It wants to grab some liquidity. That's why it at least took this low, one low, three, two low, three low. So first low it grabbed, second low it didn't take and go. So this order block two, then again say This PY2 again, see this happy again. Let me zoom. This sort of dog. To this sort of dog. If you zoom in, you can see there is an MPG. Okay, so you can plan trades like this. Okay, I think you will understand. You understand what I am trying to say. We trade like this, zone to zone. Okay, let's remove the errors and focus on what we see. Okay, first the PY to PY. Okay, PY to PY, and again this PY to this PY, and this PY to that, and that there to there, and this PY to this PY. Okay, I can see there is another PY. Okay, then I can see another PY. Let me show you first candle, second candle, third candle. This gap is our RPG, and the first candle is our out of low. So market gap and gave move downside, and then again see again came here and starting to give move. If market break this level, we will see the downside. This is advanced. When market broke this level, we shift into sale. We took sale from here and here from here. So we are waiting for market break this level, and when it break, will eventually shift into bearish, and we will see market will game eventually this particular areas. But at least we are expecting 4,500 if market break this level. Okay, you see market moves from PY to PY and PY to PY and PY to PY. So it works on PY to PY when it gives liquidity to PY. Okay, let's see when it gives liquidity. we will finish this. But these kinds of PY to liquidity and liquidity to PY is happen on market is all time high and there is no previous structure. So let's see on that where is market all time high is there is all time high. Okay, let's see. You can see market gives more from this PY. Okay, and eventually took these levels this high and see there is no level here. There is nothing here. Nothing on left side. So market will retrace. Not always going upside, upside, upside. Not like this. Not like this. It took pullback. It needs to pull back. And so market needs fuel to move. So market fuels is liquidity. Market needs money to move upside. So market needs a pullback on a structure break. So there is no POIs from previous level. So it took its liquidity, previous high liquidity, and came back to another POI. Okay, so this is we call that POI to liquidity and liquidity to POI. Okay, hope you will understand. So see the next. Again, market break this level. See, the pullbacks are not coming yet. Again, broke this level. Then it gives pullback. And see this particular level. Okay, I'm see this gap. This gap is volume imbalance. This is volume imbalance. There is no volume in this level, no trades in this level. So that's why this is a PY also. This we called a volume imbalance. So when a volume imbalance, it kind of we can take a this we kind of average, but it's not average. So the first candle here is we called a order block. Okay, so you saw the market is how market moves. Market moves from PY to PY, PY to liquidity, and liquidity to PY. Okay. So today's important thing is we will see the bias in time frame. I divide these two time frame. So one is when we see monthly, daily, and H4, H1, and when we see weekly, then weekly H4, 15. Here we will use this monthly, daily, and H1. So note down this these things. This is important. Okay, let's see examples of how we will find bias. Come to daily level and see from where. Okay, I will go first. Please note down what you see, that there is an averaging. This is our POI. So let's mark it daily POI. Sorry. When market is going upside, it uh, creates POIs, order block. Okay, this is order block. It going upside by creating these things, and again another order block. So this is the gap, volume gap, what I am telling about last time. So we call this volume gap, volume imbalance. So I consider the first candle is our order block. Okay, so you can see that market moving from PY to PY, PY to PY. Okay, and again PY to PY. Okay, this whole thing, see, gap and move to this PY, and this PY to again this PY, and again PY. Okay, then see, this is high and there is no PY left. So what it do, it sweep these levels and retrace it. So this is PY to liquidity, and liquidity to again what to see, this took again liquidity. So this will happen rarely, but eventually we will see move from there, and we will consider as this low. So the upper portion is give move, and this is we call rejection blocks. Okay, so let's not be confused, I will tell you later. But see the what market happened from this liquidity to see this liquidity to this PY. Okay, first see the volume gap. This is the volume imbalance I'm talking about. So this liquidity to this volume imbalance, and this volume imbalance to this PY. See this PY, and this PY to this, and here to there. Okay, and this PY to this all liquidity, and moves back, and again this. Okay, let me tell you how what is rejection block. Rejection block is market is uh, moving downside. Okay, and what it do, it rejects a certain level. Let's give you a proper introduction of rejection block. Okay, let's see. So market is falling, 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 and this candle is also falling, but market reaches a certain area. From there orders are getting executed. So order executed, 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 executed. So the candle is like this. red to green, or it doesn't matter red to green or red. So the rejection gets we get here is our rejection block. Okay, this 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 rejection we mark as a rejection block. The 50% area of this rejection block is important. Okay, why? Because market will again came to this level, this 50% or 75% area, and from there market will go upside. So this is rejection block. Take a screenshot if you note down this. I'll remove it. Okay, you can see the market is moving PY to PY. Okay, PY to PY, PY to liquidity, PY to PY. So let's see how we take entry on these levels. The time frame we mentioned earlier, that we will use monthly, daily, and H1. So you see that market moves from PY to PY, PY to PY, PY to PY, PY to liquidity, and liquidity to liquidity, liquidity to PY. That's market move actually. Okay. Now now how we can take our entry from this level? So for entry we must need a confirmation. So let's give you some ideas about how market moves. See, market moves from PY to PY and PY to PY, PY to liquidity and liquidity to PY. This kind of things market will done. So how we actually take our entries from these levels? So from for this we will see a confirmation. Okay, so when market will come to daily level, we shift to H1. We shift to H1. Okay, and we see a market structure shift. What is a market structure shift? Uh, if you don't know, that market will move like this. So when this structure break, we'll see bullish. So from this level, we'll enter for buy, and again a structure broke, and again we'll find some POS from here, and again we take buy trade from this level. And when this level are level will go, then we again took entry from this there. But what happened? It didn't give us entry. It broke this level. So it shifted the market structure. So from there we will see for sale entries. So the market is bullish previously, but when it breaks this low, then we shift to sell. So this is why it called market structure shift. So let's see, market came to this daily level and shift this high, lower high. So this is called market structure shift, and we will find an extreme PY From there we will place our entries like this, and stop loss is about to our low, and the target is next UI. Okay, so this is how we will see. So let's give you another. Let's see, market came here, this daily level, this is daily level, daily PY, and market, see, market is bullish, 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 and it shifted the market structure bearish. So we'll plan the sale from extreme level, and I can see bearish, 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 bearish. All the lower high is protected, and here the higher low is protected. Let's and see when it came to the daily, another daily level, it shifted the structure. So see, higher high, higher high, higher high, it broke all the higher highs. So I hope you understand that what is the market structure shift and how we place the entries. Okay, we will place entries from the extreme zones. And this is how you know for next 2, 3, or 4 days, or 1 week, or 1 month, market will what will do. Okay, but we focus on daily, that how much day or from which level to which level market will going to move. Okay, okay, let's see an example about this. I'll give you a quick example. So let's see, this is the PY first, where market will came after this break. So let's see. So this is the order block after this break, after this high break, all time high, market retrace there, and when it retracing, it creates a order block also. Okay, it creates an order block here. So what we see that there is a PY, and also there this is a PY. So we'll expecting move from this PY to this PY. Okay, so for this we will see a confirmation, because we don't know it will go or not. So let's first take a confirmation. So let's see, this is an order block daily PY. So when market came to daily PY, we'll see an MSS market structure sheet. So you can see market is falling. Okay, market is falling, and it shifted this. Okay, like this. and came to this level and go. Okay, see, so market shifted this to level, this level, left side. This is our MSS. So market give MSS in 1 hour H1. Oh, okay. Then what we see, the extreme order blocks or order PYs. So the extreme PYs is here. This is the FPG. This is the order block. Okay. This is our FPG. So from we enter our entries here, and from this level we will bullish to another order block. Okay. So let's see the duration, time duration here. How much time? See, we will bullish for almost 3 days, 10 hours. Okay, and after that we will also bullish because we will see, we will waiting for the MSS after tapping that. So tapping and MSS is here, but nothing happened. Again broke this level, again break this level. uh, then we will see MSS is here. Sorry, our MSS. So after this MSS we will wait for the extreme PYs. So this is the hourly average, and this is the hourly order block, and see market pays more from this averaging. We enter here and wait for the next order block, and the our next order block is here. Sorry, PY. Next PY is here. Let's see what if this moves, and this move gave an order block is. So will bearish from this level to this level. So if we see the time duration, you can see almost 1 week, 6 days, almost 6 days we are bearish. So this is how you can find the biases and to the entries. So in lower time frame, you can also take these entries See, from this POI, again you can sell for this and to eraser here. In every pullbacks you can take entries. This is mitigation block. When I will take lessons about order blocks, I will explain these kinds of order blocks also. Okay, these all are re-entries. So I can see this is the daily POI and what happened. The market structure shift in 1 hour took the entry from POI and wait for another order block. Where is order block? There is the order block. So you can see that for how many days you are bullish. 7 days. 7 days you are bullish. And you can take entries in every pullbacks. Okay. Let's see from this PY2 and this order block, this daily order block, it is done. So there too we can target this daily order block. Okay. See the MSS. Okay. And this is the PY. Okay, let me zoom in so you can see the levels. So this is PY. After giving MSS, we need to mark the extreme POIs. So this is the volume imbalance. We took entry from here, set our SL here, and wait for the another order block. And from this order block, we'll again wait for the MSS. Okay, let's see. And again uh, extreme zone. From here we will target the liquidity. Okay, because this is rejection block. Okay, Relation block. Okay, let's see. Then, no, this is not relation block. This is order block. Okay, from here we will target this high. Okay, and again wait for the MSS. Okay, see the MSS is here, and uh, this is the extreme zone. So market didn't come here, came here. If it came, then we will take a shot like this uh, from this daily to this daily. So they didn't came and we didn't execute any entries here. So it go away before came here. So now then see from this daily it give MSS. Okay, market is simply shift and mark the extreme POIs. This is LPG and this is order block. Then you will take place order here and now target will be this high, this liquidity. Why we are targeting these liquidities? Because there is no such an order block that we target. That's why we are targeting the liquidities. So after liquidity grab again we will see MSS. So there is the MSS is here, but so again liquidity grab, then give MSS here. Okay, this is the MSS. So my extreme POIs are here. But market didn't came. Here comes advanced things. We actually trade here also, and actually trade here also. And guys, this video have gone so much longer, so I decided to upload this as a second part. Practice this thing, practice this bias, and mark all the levels all over the year. Okay, wait for the part 2. I will, as soon as possible, I will upload this video, the second part. And the series I'm starting here, I will step by step uploading the videos that are that I use. Okay guys, that's for today. Take care of yourself and stay connected with us. Please like and subscribe if you have learned something from this video, and stay connected with us, and comment if you have any question.
related to bias or anything you want to know, I will try to explain. Okay, guys, bye for today. Wait for my next video.